Welcome to Get Rich Education. I'm your host, Keith Weinhold. Real estate sales are down, real estate prices are up, and single-family homes are becoming more popular as rentals. What's the most money that I ever made in 1 year from my day job? Are you setting yourself up for a work life where you are metaphorically hauling water buckets to the garden every day? Or did you smartly set up a sprinkler system once? All today on Get Rich Education.
Are you looking for a roadmap to financial freedom? If so, we have a solution for you. Norada Real Estate is offering a limited number of free strategy sessions to help you get out of the rat race. Learn how you can create wealth and build monthly passive income. To set up a time with one of our knowledgeable investment counselors, simply go to noradarealestate.com. That's NORADA realestate.com.
For an income property investor like you that needs an income property loan, go to Ridge Lending Group. And over the years, you've heard owner Chaley Ridge generously give her time to you right here on the show as a guest. Ridge provides investment property loans in almost every U.S. state, and you're going to find out how they've helped more Americans realize their dreams of financial freedom through real estate than any other mortgage lender in the entire nation when you get started at ridgelendinggroup.com. Get Rich Education is brought to you by Ridge Lending Group, Producers Wealth, Norada Real Estate, and Total Control Financial.
You're listening to the show that has created more passive income for people than nearly any show in the world. This is the powerful Get Rich Education.
Here it is. Hey, welcome to GRE. This is Get Rich Education, episode 202. I'm your host, Keith Weinhold. Let's start with the most basic economic principle of supply and demand as it relates to today's real estate market. And remember, we always need to break out capacity to pay from demand because it makes us focus on factors of affordability. Just think about it. If you're crawling through the scorching desert for 2 days, dying of thirst, and you don't even have $1 on you, and you run into some ruthless water seller that's selling a bottled water for $1, well, you found their supply, you have the demand, but you don't have $1 for the water, so it doesn't matter. You are soon going to die of thirst. You've got no capacity to pay. That's why demand needs to be coupled with capacity to pay. See, demand alone for housing is fairly universal. Nearly everyone wants a home of some sort, or a bigger home, or a better home. So for demand in terms of desirability, housing demand is just almost a given. But just because someone wants a home doesn't mean that they can afford one, just like the bottled water in the desert when you don't have $1. And then there's inventory of both houses on the supply side and people on the demand side. Well, the United States and the world and its 7.7 billion people are increasing in population, although not always in any given geographic area. So it's certainly possible for an area to lose population and to lose housing demand. Think about the fall of Detroit again. Now, there's a slowdown in home building in diverse locations today, though. So why is that? Well, it's not because a slump in the supply of people, and it's not a shrinking demand for homes either. There are plenty of people who want housing. Now, as far as housing supply, Reuters recently reported that a persistent shortage of properties on the market is what drove house prices to a record high. At the same time, the National Association of Realtors reported soft home building data. So we've got soft home building data despite this economic growth. So supply constraints are accounting for weak sales volume. So then why aren't home builders building more homes? Well, existing home sales, which do make up about 90% of U.S. home sales, dropped 2.2% from a year ago, June over June. Sales are being stymied by this acute shortage of homes on the market, and the shortage is due to things like rising building materials costs, and we've also got shortages of both land and labor. This leaves builders unable to bridge the inventory gap, and that pushes up home prices. And in fact, the median house price increased 5.2% from a year ago to an all-time high of now $276,900. That's not inflation adjusted. And again, that is June over June. That was the 76th consecutive month of year-on-year price gains. Housing supply is especially tight at the lower end of the market. Yes, unfortunately, those are also the homes that make the best rentals. Now, back to looking at all homes, supply remains very tight. At June's sales pace, it would take 4.3 months to exhaust the current inventory. And remember, a 6 or 7 month supply is what is viewed as a healthy balance between supply and demand. Housing starts tumbled to about 1.2 million units in June, and that's well below the 1.5 or 1.6 million units per month range that realtors estimate is needed to alleviate the shortage. So, in a way, isn't this kind of weird? So low inventory explains slow sales and higher prices. Sure, okay. But wouldn't both of those things entice home buyers to build more homes, not fewer homes? After all, if buyers are bidding prices up, well, then the opportunity to earn profits should entice builders to increase production in order to cash in on this housing price run-up. But yet there's this reportedly low supply of houses and apparently strong demand reflected by rising prices. But for some reason, home builders are slowing down. And again, the market's natural reaction should be to increase supply, which would then drive down prices. And then that would in turn make housing more affordable to more people. But that's not happening. And you know why? It is because it can't happen. Because a home builder can only drop prices so far before it's no longer economical to build. The labor shortage is what is driving up costs in residential construction. Then there's the well-publicized increases in interest expense and energy expenses, which add costs to almost everything. So with nearly every component of cost on the rise, builders can only drop their prices so far, and then they either can't build or they need to charge more. But charging more means buyers have got to be able to pay more. And maybe when builders are looking at their market studies, they're not seeing an increase in this buyer's capacity to pay. When mortgage rates are going up faster than paychecks, and inflation and gas prices and maybe even tariffs are squeezing consumers, that drags down their capacity to pay more for housing. So really, it seems pretty logical to the slowdown in housing permits in spite of this low inventory and these rising prices. So for you, is this a good thing, or for you, is this a bad thing? Well, that depends. If you're looking to buy a starter home to live in yourself, that is bad. But when you're a real estate investor renting property to others, that is good, because remember, when people cannot afford to buy, when they don't have that capacity to pay to buy, then they need to rent, and they need to rent from you. When housing crashed in 2008, it was a huge boon to investors like me that were in providing others with affordable housing, because the demand for rentals went up. Then a lot of real estate investors made fortunes. So the lesson remains, the flip side of problems are opportunities when you are aware and you're prepared. And right now, in spite of reports of a booming economy and high consumer confidence, it is not translating into home building. That might make Wall Street worry, but for Main Street real estate investors like you and I that are focusing on affordable markets and the more affordable product types, that is good. and even assisted living facilities get a boost from this supply shortage. So there's still a lot of opportunity to build reliable, long-term wealth through real estate. Now, with single-family rentals, there is now an industry group that has formed around the single-family rental space. It's called the National Rental Home Council. In fact, they had their first ever event recently in Washington, D.C. There are 16 million single-family rental homes across the country. If you look at the market share of all rental properties across the U.S., apartments, condos, single-family homes, everything, if you look at all of the rental properties across the U.S., single-family rental homes have been between 30 and 35% of all of these rental properties. And that's been true for the last 50 or 60 years. It's really been dominated by these mom and pop investors. So of these 16 million single-family rental homes, 80% of them are owned by people that only own one or two homes. Another 9% own just 3 to 5 homes. So when you look at that, basically 90% of the market own between 1 and 5 single-family rental homes. And you might own more than that right now, and you might be in that 10% of people. Now, that right there actually surprises a lot of people, and you really don't hear a whole lot about that. What you hear about are the private equity names that come into the space and have gotten involved. So you are putting yourself in a pretty exclusive group, and you're really positioned for long-term prosperity. Now, institutional investors are coming in and buying out more of these mom and pop single-family investors, and we're talking about bigger players coming into this insanely fragmented industry. Tricon American Homes, Invitation Homes, American Homes for Rent, now owning between 10,000 and 80,000 homes. Well, among the proportion of new homes being built, which, as we discussed, is not high enough to keep up with demand, among that portion, there is an increase in the single-family build-to-rent space, specifically building single-family homes and building them as rentals from day one. Atlanta is probably ground zero for the single-family rental industry. It is the biggest market for most of the institutional names in the space. Even in the Atlanta metro, it's still only 5% of single-family rental homes that are owned by institutional investors. So it's mostly mom and pop types still. Well, how can an investor like you exploit the rise in the single-family rental market? Well, a lot of it is understanding the geographic arbitrage that you can create with turnkeys that are in investor advantage metros, what I call the stable inland markets, not what I call the volatile coastal markets. Well, let's say that you bought a high-priced California or Pacific Northwest home some years ago, or maybe it's in the Metro Northeast, a high-priced home. Then you moved out of it, but you kept it as a rental because you had a great interest rate that you wanted to keep in place on that home that you used to live in. So let's say that your single-family rental there now has a market value of $1 million. Well, here's the thing. In Cali or the coastal Pacific Northwest or the high-priced Northeast markets, you're only going to get about $3,500 in rent for that $1 million rental. That is an awful 0.35% rent to price ratio. Dreadful, even wasteful. If you're going to own $1 million worth of rental property, you could get between $8,000 and $10,000 in monthly rent by purchasing in Memphis or St. Louis or Kansas City or Dallas or Houston or Indianapolis or Jacksonville or Orlando or Birmingham or Cleveland. And those investor advantage stable inland markets, they also have landlord-tenant laws that tilt in favor of property owners like you and away from the tenant. So either way, fewer single-family rental tenants can leave to go buy a home now that interest rates are higher because those higher interest rates dent their affordability, and you're more likely to be able to get rent increases. So use your knowledge to exploit this geographic arbitrage. Well, what is the most money that I ever made from my day job, and why does that matter? That's next. You're listening to Get Rich Education. Finally, Total Control Financial gives you checkbook control of your 401k and IRA money to invest in real estate. It's time to get your retirement money into your own checking account, but you've got to avoid the little-known tax that you'll pay with any self-directed IRA. Instead, it's time for the QRP. Learn more and get a copy of the QRP book by text messaging the letters QRP to 72000. That's text QRP to 72,000. MC Laubscher is the host of the top-rated business and investing podcast, Cash Flow Ninja, and also the president of Producers Wealth. Producers Wealth assists people in creating, protecting, and perpetually multiplying wealth in any economy through creating processes that help them increase their production, provide them with liquidity, passive income generators, and opportunities for enormous growth. Learn more about their time-tested and proven systems at yourownbankingsystem.com.
This is Peak Prosperity's Chris Martinson. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education. I have a question for you. How are you living? Are you hauling water buckets to the garden every day? Or are you setting up a sprinkler system in the garden once? Like you, I metaphorically spent part of my life hauling water buckets to the garden every single day. It taxed my shoulders. It strained my neck and forearms, and I just wanted to find a way out of that grind. I'm describing what was my day job when I had one, and I'm describing your day job. I would show up over and over again for the same work that very much resembled the work that I did the day before. I was trading my time for dollars. I sold my time for money. Well, how much money? What is the most money that I ever made from my day job back when I had one? The most that I ever made in 1 year from my day job, I looked this up, was $108,000. 108K. And that was almost 5 years ago. That income included having to work some overtime hours in the summertime. That was the busy season at the State of Alaska Department of Transportation, where I did construction quality assurance work. So my point here is that you don't have to make a high income from your day job in order to buy cash flowing real estate. Remember, that wasn't even my salary every year. That was just my highest. As long as you reposition your equity and you keep a high velocity of money, and you keep other people's money working for you, that's why your income doesn't have to be high. The time that I was most needed at work during the summer, that's exactly when I wanted to take time off. But I couldn't, and I'm never going to get that time back. I'll never get those chapters of my youth back. And by the way, I did not leave my job because I worked with any jerks. I really worked with all great people there at the DOT. Totally stable job, too. Total security. Most of our highway and airport project funding came from federal coffers, so that job was insulated from state economic downturns. Yes, that was security. Well, why did I leave? Precisely because I had security. Security is the opposite of freedom, right? That's why they call prisons high security compounds. So my job was not like prison at all. I don't mean to say that, but my day job could never be what I most wanted to do with my time. I knew that early on, luckily from a seed that my dad, Kurt Weinhold, had planted in me, which basically said, unless you're truly 100% passionate about your job and its mission, truly passionate, don't kid yourself. Don't lie to yourself. Don't play some charade. Don't let your job define you then. That's an awful way to design your life. And knowing this early on in my job working days, I began my paradigm shift way back in 2002 while I was still hauling water buckets to the garden every day, which is what my job was. I took a little piece of extra time, just a little piece, and began building a sprinkler system. On August 9th, 2002, I got my sprinkler system set up for the first time, and I was giving it a dry run. That was the day that I bought my first ever piece of real estate of any kind, that fourplex building, for $295,000 in Midtown Anchorage, Alaska, where I lived in one unit and rented out the other three. Now, for the first time in my life, I had some passive income. Now I had the sprinkler system set up. But having just this one property, I still didn't have enough water running through the sprinkler system hose. But you know what? Now that I was moving a little trickle of sprinkler system water to the garden while I was still hauling buckets of water by hand at the day job, and over the years, what I did, rather than taking on more hours at work, I began buying more income property. That is, I focused on running more and more water through my automated sprinkler system until finally I didn't have to haul any water buckets over and over and over at the day job any longer. The sprinkler system water was my flow of passive income from rental property. It flows with almost none of my own involvement. Hauling buckets of water always involved me. I put the buckets away years ago. I don't need to haul water by hand anymore. I am free to go live my life. I want you to have the ability to be able to do that as well. Now, once in a while, the sprinkler system might spring a little leak, and I need to step in for an hour here or there to make a decision. But even then, the property manager is the one turning the wrench or patching the hole on the sprinkler system hose out in the hot sun. Even if my cash flow stops for a little while because there is an unexpected major maintenance item, I know that I'm still getting paid the other 4 ways that real estate pays you. Are you hauling water buckets by hand every day? Or did you build a sprinkler system once and start relying on a smart, sustainable, historically proven system? It is your active income versus your passive income. If you set up a high volume sprinkler system, if you wanted to, you could still haul water by hand with buckets if you want. But you know what? It's nice to have the option of not having to do it. You can haul water buckets to the garden, or you can set up a sprinkler system in a garden once. Well, there are 2 chances coming up for us to meet in person that I want to tell you about. Then I want to tell you about an awesome little real estate investing related kind of gift that I want to email to you. First of all, you might be one person that I'm meeting for our cash flowing resort property tour in the Caribbean in just over 2 weeks. That's September 6th to 9th. You can learn more about that at getricheducation.com/Belize. And I've already discussed that on some earlier episodes. So also, November 1st through 4th, you can meet me at the longest running investment conference in the United States. It's the prestigious 44th Annual New Orleans Investment Conference in New Orleans, Louisiana. 44 years as the investor's best friend. I'm thrilled to tell you that I'll be appearing for a little meet and greet with you at America's longest running investment event because I would love to meet you. You'll also have a chance to meet 2018 New Orleans event speakers in person there, like Robert Kiyosaki, Peter Schiff, the real estate guys, Tom Wheelwright, Chris Martenson, and so many more that are going to be there. All these guests have appeared with us here on Get Rich Education. This is besides the learning, investment ideas, networking, and new friendships you're going to enjoy at the conference, which you can 5x or 10x or 20x. I mean, really, how many chances in your life will you have to meet Robert Kiyosaki, the greatest selling financial author of all time? Anyway, he's the author of Rich Dad, Poor Dad. At the meet and greet, you and I can chat, I can sign your book, and we can have a photo together. And my meet and greet with you is at the Agro Nosotros booth with David Sewell and Darren Doyle. It's booth number 111, but they have a large can't-miss booth because they're one of the platinum sponsors at the event, and I'll give you the meet and greet date and time later. You know the booth hosts, David and Darren, as those affable guys that provide you coffee and cacao agricultural investments. I've hosted them on the show here 5 times over the years. It's a great way for you to meet them and ask them questions about agricultural investing as well. I think you know that I'm an agricultural investor with them myself, and it's not the first foreign investment that I ever made, but it's still the best foreign investment that I've ever made. You're probably going to run into some more people that you know that you didn't expect to. This is going to be my 3rd time at the New Orleans Investment Conference. In New Orleans, while you're attending the sessions across the hall from where the booths are, you're going to learn how Trump's economy will affect real estate. You're going to listen to some well-known speakers speak, meet like-minded people, make friendships, meet your heroes and thought leaders in person, discover all kinds of powerful investing strategies. There are breakout sessions, including some sessions for beginners. Besides real estate, there are also presentations and booths about precious metals, energy, currency, stocks, and more. And if that's not enough, there could be some surprise speakers announced. In fact, past speakers at the event include President Gerald Ford, Margaret Thatcher, Steve Forbes, Milton Friedman, Norman Schwarzkopf, Ayn Rand, Charles Schwab, Dick Cheney, Jim Rogers, Colin Powell, former Fed Chairman Alan Greenspan, First Lady Barbara Bush, and Ron Paul. Despite those esteemed names, there are plenty of sessions for novice investors and even a lot to learn for someone that's never invested at all. The whole event is super affordably priced for you too. And just consider taking some extra days in New Orleans. It's a fun city if you haven't been there. Bourbon Street, Decatur Street, the French Quarter, Mississippi Riverboat tours, haunted attractions, Cajun food, alligator tours, and even the New Orleans Saints play a home game then. And November 1st through 4th is a Thursday, Friday, Saturday, and Sunday. I want to meet you there. A couple weeks ago, I told you about a cool little real estate investing related gift that I was having made for you so I could email it to you, and now it is completed. Let me tell you what it is. You know, for years, I didn't understand all the ways that real estate investors got paid. I didn't know how they got wealthy and why mutual fund investors never did. If you've been listening here for any length of time, you know that I've come up with the 5 simultaneous profit centers that you have as a real estate investor, and I'm the first person that I've ever heard talk about it. In fact, this is so crucial to understand why you would even want to invest in real estate. You almost must invest in real estate to get ahead. And I found out that not only do most real estate investors not understand how they're paid, most real estate investing educators don't even understand the 5 ways. They might cite 3 or 4 of them. So a couple months ago, I thought, wouldn't it be awesome to have the 5 ways real estate investors are paid arranged into a nice, easy to read infographic that showed just enough detail with some numbers and explanation, but wasn't too overwhelming with info, and some color on the infographic would make it a little appealing. And we could have it arranged all in one view. Well, that's what I had made. I gave the instructions to a graphic designer, and now we've got it. Finally, the 5 ways that real estate investors get paid in one infographic, and it runs through an example with numbers. You know, the world is largely digital these days, and we don't print off a piece of paper for many reasons anymore. But when I send this to you, you are going to want to print this off. In fact, the infographic was originally done to fit on an 8.5 by 14 inch legal aspect ratio, but then I had some words removed and I had them shrink it down so that it fits on a standard 8.5 by 11 sheet of letter size paper for you. That's the paper that everyone has in their printer. This is something that when you print it off, you are going to want to laminate it and put it on the wall of your office. Every real estate office in the United States should have this printed out and on a wall in various locations. Or maybe you have a home office or a family office, and rather than laminate it, you want to place it flat down beneath the glass that you have on your desk. Yes, it is the 5 ways real estate investors are paid infographic in PDF format. It's going to help people finally understand how real estate investors are paid. That is a substantial part of your big why. If you've got some bumpy months on your rental property or a sprinkler system as it may be, you can be reminded of all of the other ways that you're profiting when you take a look at this. And when you see this, and say you're in the real estate field or you're a real estate agent, this can motivate you to become an agent that specializes in helping investors find income property. If you love real estate, maybe you should be an agent that specializes in income property. That's pretty smart, because if you're an agent that caters to those buying primary residences, that's fine, but that client might only buy once every 8 years. But when you serve investors, they buy multiple properties in a year. In fact, there's a book on how to do that. It's written by my friend Bob Helms, the godfather of real estate, and it's called Be in the Top 1%, a real estate agent's guide to getting rich in the investment property niche. But back to the 5 ways you're paid infographic. This is exciting to see how it all adds up. Let me read most of the sheet to you, and we'll see what type of year 1 return on investment you get. Again, this right here is why we do this. So income property often pays you 5 ways simultaneously. Say you buy a $100,000 rental single-family home with a tenant where the rent income exceeds expenses. The first way you're paid is with appreciation. Your property appreciates from $100K up to $106K, just commensurate with real estate's historic appreciation rate of 6%. Well, you achieved a 6% return on both your $20K and you got a 6% return on the $80K borrowed from the bank. Your $6,000 gain is based on your $20,000 down payment. This magic of financial leverage means your return is 30%. The second of 5 ways is cash flow. Your monthly rent income minus all of your expenses like mortgage, vacancy, insurance, maintenance, taxes, utilities, and management leaves you with, say, $150 of residual income in this case. Annually, that's $1,800 divided by your $20K down payment on the property. This is the portion known as the cash-on-cash return. That is another 9%. The third way you're paid is with loan principal paydown. Unlike your own home where you pay this, your tenant pays the monthly principal portion on your $80,000 loan on this property at a 6% interest rate on a 30-year mortgage. That's $898 that the tenant pays down for you annually. Divided by your $20K of skin in the game means that's another 4% return for you. The fourth of 5 ways you're paid is with a tax benefit. You have a mortgage interest deduction, an ability to pay 0 capital gains tax with a 1031 exchange, and tax depreciation, which can tax shelter part of your rent income. This is pretty hard to measure. With bonus depreciation, I'm being awfully conservative here, but we'll call your investment tailwind another 5% in this first year. And the fifth and final way that you're paid is probably the least understood way. Just like inflation erodes the value of your lump of savings, it also degrades your mortgage debt balance. How does it do that? That's because your $80,000 loan today gets easier to pay back as wages and prices escalate over time. Your bank only asks to be repaid in nominal dollars while your tenant pays the interest. Your bank doesn't ask to be repaid the $80K in real inflation-adjusted dollars over time. We're going to call this benefit a return of another 3%. So add up the 5 ways you're paid. Appreciation gives you 30%. Cash flow, 9%. Loan paydown, 4%. Tax benefit is another 5%. And then finally, your inflation hedging benefit gives you another 3% profit center. Therefore, your first year total ROI from this income property is 51%. Now you understand how real estate makes ordinary people wealthy. You want to extrapolate this out to a $2 million property? Well, you're just going to multiply all your numbers by 20 since we only used an example of a $100,000 property here. And there are a few notes and caveats because I just don't want any novice to pick this up and think they're definitely going to get 51% if they just throw a dart at a board and pick their property that way. We didn't factor in your buyer mortgage loan closing costs, and you still have risks. You could buy in a losing job market, you could hire the wrong property manager, and you just are going to have some inevitable problems along the way. But, even if 1/3 of things go wrong, you're still going to have a 34% return. So that's it. It is the 5 ways real estate investors are paid infographic. I'm going to send this free infographic to everyone that's on our newsletter list next Tuesday. That's Tuesday, August 28th. You can share that infographic with anybody by forwarding the email newsletter or even just by printing off a whole bunch of these infographics. I'll also send the info to you, our Get Rich Education newsletter subscriber, for meeting in person at the New Orleans Investment Conference because I would like to meet you. I'll send you that shortly after I send you the 5 ways infographic next week. On the next episode here on Get Rich Education, we're going to talk about doctors and investing. Yes, doctors usually come out of medical school with tons of debt, but then they make higher than average income, so it's pretty interesting. It's doctors and investing next week. Now, if you want to subscribe to the Get Rich Education newsletter and get the infographic and the free ebook and the information on the New Orleans Investment Conference, subscribing is 100% free. All you got to do is sign up at getricheducation.com, and you even get my free ebook right away when you do that. Until next week, when I'll be back to help you build your wealth, whatever you do, don't quit your daydreaming.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
Ranked by Forbes as one of the fastest growing cities, Orlando, Florida has a big and diverse economy, yet still features affordable rental properties that cash flow. Our boots on the ground turnkey provider, Greg Bond, wrote a special report to help you discover the amazing market of Orlando. Request your free copy today. Visit getricheducation.com/Orlando. That's getricheducation.com/Orlando.
The preceding program was brought to you by your home for wealth building, getricheducation.com.